Good morning and welcome to another edition of our Ashworth Weekly Market Update. We are excited to have you here today and have just a little bit of information for you with regards to the banking system today. And it's interesting as we have gone through the banking crisis over the last couple of weeks, over the last couple of months. One of the things has become clear is that the banks, even before this crisis started, have started to tighten lending standards and are actually making less loans than they previously have been. You can see here from this chart that we've got here clear back at the start of 2020, 2021, banks started increasing their lending standards. It hasn't been a ton, but it's been incrementally being increased. And this is now beginning to be felt over the inflationary indexes that we track. If we look at overall inflation as it came in over the last quarter, it has fallen and continues to fall. Interestingly enough, if we take out the accelerators to inflation like energy and some of the other sticky components that we've talked about in the past, such as real estate, the price on the month has only increased 0.11%. So we're definitely seeing some signs that the inflation, even the more stickier part of the inflation, is beginning to come down, which will be good for the Fed to be able to potentially take a pause on interest rates going forward. But it's yet to be seen what's going to be the long-term impact of this additional increase in tightening from the bank standards. And one of the things that as we track economists, a number of the economists are looking at is there are more of them now that say that we're more than likely going to go into some sort of recession before the end of the year. And so we will see how this plays out, but for now it seems like the rising of interest rates has worked the way that the Fed has designed it to. The downfall of that is we've had a little bit of a bumpy ride with the banks and with the markets in general. But we anticipate that this will work itself out and eventually should be for the good of the economy. So we are hopeful that by the end of the year, much of this stuff will be worked through the system and we'll be able to get back to a little more normal marketplace. That's our thought for today. Thank you for tuning in. And again, if you have any friends, family, or associates that you feel like could benefit from our weekly webinar, please feel free to forward our link. And thank you again for participating with us today, and we will see you next week. Thank you.